Well, joining me now virtually to discuss this and much more, I have Damiliola Akinbami, Senior Manager, Clients and Industries, Deloitte. Thank you very much for joining us on the Breakfast Show this morning.
Thank you for having me. Good morning.
Now, in the March report we had, the Consumer Price Index, which measures inflation, increased to 15.92% on a year-on-year basis. This is about 2.25% lower than the 18.17% recorded in March last year. Now, on a month-on-month basis as well, we've seen the headline index increase to 1.74% in March. Do you think the margin for the month of April will mimic somewhat the same pattern we've seen? Let's also put into consideration the increases we've seen in energy prices and food inflation, which really remain the key drivers of inflation both on the domestic and global front.
Yes, it's very likely that April numbers, the inflation numbers for April, will mimic past trends. And I'm expecting that the inflation numbers will actually cross the 16% threshold from 15.92 in March. And if this happens, it will be the third monthly consecutive increase, and it would also be the highest level of inflation since September 2021, when inflation was around 16.63%. And what is driving this upward movement in inflation? The factors are basically cost push and predominantly supply driven factors. So for instance, rising imported inflation. We know what's going on in the global economy. The US, for instance, recorded a 40-year high in its inflation rate, about 8.5% in March. The UK also recorded a 30-year high of about 7%. And even in the regional markets, we are seeing that increase in consumer prices. And this has been exacerbated by the ongoing Russia-Ukraine war, which has driven or pushed food prices, commodity prices, and even energy prices upwards. And aside from that, what is also impacting on imported inflation in Nigeria is the exchange rate pass-through effect. Nigeria is a highly import-dependent economy. Some analysts will put our marginal propensity to import around 24%, as at 2020. But I am of the opinion that this is even much higher, about 30%. What that means is that for every item in Nigerian consumes, at least 30% is imported. So that just shows you that import dependency of the Nigerian economy. Aside from rising imported inflation, we're at the onset of the planting season, and during the planting season, what happens is that output is reduced, supply is affected, and shortages kick in. And obviously, this would lead to higher food prices. Also, you mentioned energy prices. That's a good one. This is also a major factor driving consumer prices in Nigeria, and even globally. We've seen that oil prices are trading above $100. And for Nigeria, higher oil prices, like a double-edged sword. On one hand, we benefit from increased forex, and we benefit from increased government revenue. But because we import all of our refined petroleum products, we have a high import bill. So the higher oil prices increase, plus the exchange rate impact, the higher we pay in terms of what we import for fuel. So that's why you see that diesel prices have gone up, petrol prices have gone up. Even look at aviation fuel, that also has increased. So, and the thing about it that once these energy fuels increase, it filters into transport fares, and you start to see transport fares increase, and that also will filter into the consumer basket. Ironically, transport fares just account for about 6% of the consumer price basket, but the implications are far reaching. And also, I also want to bring to bear the fact that there are also fundamental issues and structural issues that are also driving inflation, like the insecurity that is ongoing. And the impact of all this on inflation should actually be significantly higher, like what we're seeing in other economies. But because of weak consumer purchasing power, that has limited the price increase to just marginal upticks. So most likely April numbers would increase
Exactly.
further.
Definitely, Damiliola. Now, let me button here. We're already halfway through the second quarter of this year. However, how much of a problem do you think is the nation's double-digit inflation rate to the new global poverty line set at $2.15 by the World Bank? For developing nations like Nigeria with very high poverty rates, many more people will likely be thrown further below the poverty line due to rising inflation. And this is also exacerbated, like you've also mentioned, situations of food crisis and insecurity. What sort of social intervention, especially within the agriculture sector, now do you think government can help ease up this reality that food inflation is really biting deeper into the average man's pocket?
Yeah, so the agricultural sector in Nigeria accounts for about 25% of GDP. This sector is also growing at about 3%, but meanwhile, it's the largest employer of labor. And so you need to understand what the challenges are that are facing this sector in order to be able to address or come up with social policies that would address poverty and food insecurity in the country. So one, for instance, is the fact that there's low access to credit. Yes, we've seen increased focus of policies towards boosting agricultural inclusion. So for instance, banking sector credit to the agricultural sector is a mega 3-4% compared to the manufacturing and oil and gas sectors, which are about 15% to about 18% respectively. So that just shows that wide variance. And this is a sector, like I mentioned earlier, that employs or is the largest employer of labor. So one, we need to address that aspect and boost credit to the sector. Also, employment is a very important key when you're talking about poverty, eradicating poverty and alleviating poverty. So one social intervention policy would be to boost employment opportunities in the country, create an enabling environment. Because if there's an enabling environment, investors will be attracted to that environment and want to invest. And therefore, we would see that boost and increase in output. Once output increases and productivity is enhanced, therefore, we will see an increase in sales revenue, companies will be able to employ more. So creating employment measures or implementing employment measures definitely would help to address the poverty issue in Nigeria. Also, unlocking the value chain across the agricultural sector, because one major issue is post-harvest losses. If you address that, to an extent, you address the food insecurity in Nigeria, and that will help in addressing poverty.
Now, wrapping up our conversation, we also expect the Monetary Policy Committee meeting of the Central Bank of Nigeria later by the close of this month.
Yes.
The Arsenals, according to the outgoing governor, Godwin Emefiele, since he's also expressed interest to run for president, he's expected to step down. And he says that some of the Arsenals in a prior speech are growing thinner. What sort of policy direction do you think the NPC will likely take on, especially to rein in inflation? Do you see a tightening, maintenance, or loosening, and the impact of these rates on the economy?
Well, economic indicators are actually in favor of a tightening. And if you look at what's happening globally and regionally, a lot of monetary authorities have begun to normalize monetary policy rates. We know that the US has increased interest rates so far this year by about 75 basis points. The Bank of England has done so. Ghana has increased its interest rate by about 250 basis points so far this year. Even South Africa has increased by about 50 basis points. So it's only a matter of time for the Monetary Policy Committee of the CBN to follow or toe that line. And definitely, most likely, if you even look at what happened, the body language and the voting pattern of the last meeting in March, 40% of the members voted in favor of a hike. That means that the hawks amongst the monetary policy committees are becoming bolder. And it's only a matter of time, like I mentioned, that we would see a tightening stance. So, it's most likely, more often than not, we're going to see an increase in interest rates because that probability compared to what it was at the start of the year is significantly higher.
Thank you so much for your time on The Breakfast Show this morning. It's really been a pleasure speaking with you, Damiliola Akinbami. We've been speaking with Senior Manager, Clients and Industries of Deloitte, and we keep our fingers crossed to see what will be the next move of the Monetary Policy Committee as they meet by the close of this month.
Thank you for having me.